You have raised your full-year guidance, but only slightly. Why so conservative? Is the current macroeconomic conditions a concern for you?
Yeah, well, generally we tend to be conservative, and we've had a really good run this year. But, you know, the last quarter isn't over, and we have a lot more nat cats in this world today, so things can happen last minute. But overall, we're very confident to reach the upper end of our outlook for the operating profitability. Markets have been good, but particularly Allianz have been resilient. And therefore, in an environment where very few things are resilient, it's really good to be where we are.
You announced a share buyback as well.
Yes.
And that was big. Why and why not invest that in potential other acquisition targets or so forth?
German stocks have been hit very much by particularly American investors pulling back in light of the war in Ukraine and the potential energy crisis in Europe heading for recession. So particularly German stocks have been oversold. And our shares have traded down like many of the premium companies in Germany. So investing in our own stock at this point in time was the most profitable investment for our shareholders. But over time, we would love to invest more here in Asia.
What about rising bond yields? What's the impact that you've seen? Obviously, rising investment returns. Has that been meaningful?
Yeah, so for us, it's very important that people understand interest rates up are very good for financial institutions, and particularly also for us, and particularly for our life insurance and P&C insurance clients, because investment income is going to go up significantly over time.
Germany, the German economy is facing a really interesting inflection point at the moment. Talk to me about your views on the potential deindustrialization, what the ultimate wash-up effect is going to be from the energy crisis.
So short term, we have to manage this crisis very carefully. And I am a born optimist, so I'll sort of look on the bright side of things. Because look at the fact that we're just launching our first LNG terminal, which was originally projected to only open after 2 years, and it's been a little over a year since we started. So we are very happy with the progress. But it's going to take time to rewire the energy infrastructure, and Germany is really dependent on stable, not just cheap energy. So we're going to see significant fallout in the restructuring of the industry. On the other hand, we're not going to see deindustrialization in Germany. To the opposite. And I'll give you an analogy. When a few years ago, the Swiss franc floated against the euro and traded up almost 20%, I think. I don't know what the number was. Everybody said, you know, Switzerland is going to deindustrialize. And the opposite has happened. So we're going to do well.
So you see companies moving in as opposed to moving out?
No, it's not about that. It's about the fact that it spurs really innovation. Yes, we may not be able to produce ammoniac as a base chemical material in Germany at the current energy cost, but we have amazing companies, both small, medium-sized and large, that are going to use the opportunity of the energy transition to reinvent our business model and do just so much better.
You mentioned opportunities in Asia as well. We have seen China just implementing plans for a private pension system. Yeah. Is that something that's interesting to you?
Absolutely, because Germany, and I'm quoting a Chinese friend, is saying, has one of the most developed and most efficient pension systems in the world. So if we are provided with proper market access and access to distribution, we would love to contribute to creating a better pension system in China.
Germany is also one of the oldest friends and trade partners for China, right?
Yes.
Do you have views on COVID zero, the new consolidation of leadership, and the market opportunities going forward?
Yes, it's the jury will be out, and you just mentioned we've been long-term friends of China and want to stay there. And obviously, with the geopolitics, it's going to be a bit more complicated. But like our host, Singapore, we don't want to be forced to choose between two friends.
Staying in China, Allianz China Life receiving that regulatory approval to become the first wholly foreign-owned life insurance company. What's the next expansion plan then?
We just need to do what we said we'd do, which is add high-quality distribution and bring very, very good products to the end consumer. It's as simple as that. And it's very hard to do because the industry is very competitive. The top Chinese local firms command, together the top four, command more than 80% of the profit. So it's a very consolidated industry. So it's not easy, but it's also a huge market that provides lots of opportunities.
What's the timeline?
The timeline is forever. No, I'm just kidding. So, but we're really just starting.
PIMCO, for example, now we have seen a lot of pressure around, the global markets, the economy, the market volatility as well.
Yes.
Would they be interested in doing more wealth management as well?
Are you talking about China or in general?
In China as a JV, as a Chinese wealth subsidiary, for example?
Yeah, the interesting thing is in the past you had JV requirements for everything. And PIMCO is a very strong firm where the partners make these decisions largely by themselves. And they do not do usually well with joint ventures. As for us in life insurance, it's very important to be able to fully operate independently. But it's there for them to decide. My personal opinion is that asset management in general, including for Allianz Global Investors, is going to be a huge opportunity because China needs to diversify its overseas investments. And good advice, particularly how to invest in Europe or how to invest in US credit markets by PIMCO, will be a very important subject for the Chinese people. So I think we can add a lot of value there.
Speaking of the US market, Allianz paid, $6 billion to close down, settle Structured Alpha.
Yeah.
So global, really the asset management arm has been closed in the US. What does that say about the commitment to that market, and what are the plans for that?
It's very interesting. So we are very strongly committed. We have basically had expense of 4.5 billion euros after tax. But and that's very important, most of the money has been going to our investor clients because we wanted to make sure whatever happens when you're an Allianz client, we take care of you. So every investor in the public funds has received at least the principal back, which is the first time because we're investing. If something goes bad when you are our client, we make sure we protect and compensate you. The fine, actually, that everybody talks to the DOJ was $167 million. So the DOJ has really acknowledged that we've been taking care of our clients, and I'm very proud about that. To your question, we have created a partnership with Voya where we integrated our business with them, and now we own 24% of Voya, and we do their distribution outside of the United States. So we have not exited US markets.
Oliver, it's a great conversation to be had, and it will take so much longer to decipher, but just quickly, your next biggest concern for the year ahead, inflation or recession, and why?
It's both, and particularly inflation.
You cannot say both. Which one is bigger?
But they're both a concern. Short term, the inflation is the bigger one, particularly in Europe, because we have a different inflation structure than in the United States. In the United States, rates have been trading up. And with the proper investment products, you can actually earn more than what current inflation is. That is not possible in Europe at the moment because we have still financial repression. What does that mean? Official rates are far below what inflation rates are. So savers are being taken for a ride and have been taken for a ride for the last decade because it's very important to understand that that benefits people that have a lot of debt, particularly public households. So savers are being disenfranchised. And that is going to continue because governments have an interest in reducing their debt levels. So that's very important. And protecting clients means we need to be able to provide them with access to investment products that balance inflation risk. So that's real assets in any shape or form, because when you're in fixed income in Europe, you're going to lose money for the next few years unless you are with us. So that's very important. The second thing is we are going to go into a recession. I cannot tell you how much that is going to affect us, because as you mentioned earlier, we have still very strong job markets. So if we get into a negative spiral of increasing wages by too much and that drives prices up further, it will be very hard to get it under control. Unlike in the US, where I think you're making late but good progress on fighting inflation.